Hi, I'm Megan Miller, Associate Wealth Advisor at Towerpoint Wealth, a leading wealth management firm in downtown Sacramento. As we move further into 2025, smart tax planning isn't just about looking back at last year, it's about making proactive moves now to maximize your savings and potentially reduce your future tax bill. There are plenty of strategies available to help you legally and effectively minimize what you owe to Uncle Sam, but many taxpayers don't take advantage of them simply because they don't know where to start. So, what are the best tax saving hacks for 2025? Who stands to benefit the most? And what steps can you take today to keep more of your hard-earned money? To break it all down, Towerpoint Wealth's president, Joseph Eschleman, sat down with Lora Painter of ABC 10 on her latest Dollars and Cents segment to discuss key tax saving strategies for 2025 and how you can stay ahead of the game when it comes to reducing your obligation to Uncle Sam. Let's take a look at their conversation.
In more Dollars and Cents, even if you've already filed your taxes this year, it's not too early to start planning ahead for next year. I talked with a Sacramento-based financial planner about small adjustments you can make now to save money, reduce your tax burden, and set the stage for a financially bright future. What are some moves people should make to make filing next year a little easier?
There's a number of considerations involved with proactive tax planning.
Joseph Eschleman, president of Towerpoint Wealth, says tax brackets at the federal level are still historically low, so you might consider accelerating income.
Which means paying more in income tax.
Not everyone has the ability to do this, but if you have certain investments, Eschleman says it may be worth your while to pay a little more tax now while rates are low. You might also consider a Roth IRA conversion.
Convert dollars that you have in an IRA account to a Roth IRA account. And the benefit of considering doing what we call a Roth conversion is once you get that money in your Roth IRA, it grows tax-free and it comes out tax-free.
Eschleman warns you could owe income taxes on the amount you convert, but 2025 could be a good time to pay the tax now during historically low rates. When it comes to investments, losses aren't always such a bad thing. Consider what's called tax loss harvesting.
If you have an investment that's declined in value, sometimes it makes sense to sell it because you own that investment at a loss.
Eschleman says you can use the losses to offset taxable gains from other investments. He says if your total realized losses are more than your realized gains, you can offset up to $3,000 in ordinary income annually.
A lot of times, Laura, people only look to do tax loss harvesting at the end of the year.
Oh, really?
When they're starting to come up against the December 31st calendar year deadline. But in our opinion at Towerpoint, it makes sense to consider loss harvesting and looking for these opportunities throughout the year rather than just waiting until November or December.
Eschleman also says not all investments are equal when it comes to taxes. This is where asset location comes in. It means putting investments in accounts that offer the most favorable tax treatment.
So when we talk about locating certain investments in certain accounts, what we'll do with our clients is if they own an investment that pays out a lot of regular, ordinary interest and income, which again we like, but it's tax problematic, we'll own those what we call tax inefficient investments inside their retirement account only.
That makes so much sense. Thank you so much. So doing some investigative work through the numbers and your accounts can really pay off.
Yep.
Remember, everyone's situation is unique, so talk with a financial advisor or tax expert to find the best tax-saving plan for you. You'll also want to prepare for the Tax Cuts and Jobs Act potentially expiring. It's a 2017 law that more than doubled the standard deduction and child tax credit, among other things. If it expires at the end of this year, it could make a big difference to your wallet and your taxes. I break that down in detail for you in another Dollars and Cents story coming up in just a moment.
At Towerpoint Wealth, we believe that smart tax planning is not just something to think about during tax season, it's a year-round philosophy. Whether it's maximizing deductions, optimizing retirement contributions, accelerating or decelerating income, or leveraging tax-efficient investment strategies, there are plenty of ways to reduce your tax burden and boost your potential net worth. A big thank you to Lora Painter and ABC 10, as always, for trusting us as their financial experts to break down complex tax topics and provide clarity to viewers like you. If you have questions about how to implement these tax-saving strategies, please don't hesitate to reach out. You can find us at www.towerpointwealth.com. We're here to help. Thanks for joining us, and we'll see you next time.